Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, and specifically to talk about what's going on with oil revenue. Now, the sale of oil represents the largest single source of revenue for Russia, and despite the fact that Russia has a variety of sanctions against it, it's still selling large volumes of oil. And one of the reasons for that is that the oil companies themselves haven't actually been sanctioned. The West wanted to maintain the flow of oil coming out of Russia to make sure that the world economy remained in balance. However, in order to limit the amount that Russia has been earning, two price caps were applied. The first was a $60 price cap against crude oil sales, and the second was against refined oil sales. Now, the actual level for those refined oil caps varies depending on what sort of refined product it is, whether it's gasoline or diesel or kerosene or a variety of other different types of refined products. And the way that these price caps have been policed is through the shipping. Now, prior to Russia's invasion of Ukraine, the vast majority of ships that were moving Russian oil were owned or insured by the West. And so those companies have been instructed that they need to see paperwork that shows that any Russian oil that they're transporting comes in below those caps. However, over the course of the last 18 months, what we have seen is a huge increase in the use of what's being referred to as the dark fleet, the shadow fleet that Russia is using. And these are ships that are owned by unknown entities and are often insured either by Russia or other countries. And the growth of this dark fleet means that Russia has been able to increase the amount that it's been earning. However, despite the growth of that dark fleet, it's been reported that in August 2024, Russia's income from oil sales fell by 8%. And this is the fifth consecutive month that Russia has seen a decline in revenue from its oil sales. So in today's video, we'll take a detailed look at what's been happening with both crude oil sales and refined products. And you'll be interested to hear that Russia is currently earning more from the sale of refined products than it is from pure crude oil sales. So we'll go through the details as to why that is. We'll have a look at a breakdown of which countries are buying crude oil and refined oil directly from Russia. We'll also have a look at what's going on with the price of Russian oil, how Russia is managing to avoid the price caps, and what price it's now achieving for the sale of its oil. We'll also have a look at what's going on with the dark fleet and the fleet that's owned by the West. And then finally today I'll wrap up with my summary as to what I think's going on right now with regards to Russian oil sales, what's likely to happen over the course of the next 3 to 6 months, and what the implications of all of this are for the Russian economy. But before we get started on all of that, I'd like to say thank you so much to everyone that's supporting the channel. Really, really mean this. If you're a long-term supporter, either through Patreon, where you can get early access to my videos and watch them advert-free, or YouTube membership, where you'll also get early access, or buy me a coffee membership, thank you so much for being a member. Really helps to keep me going to know that there's lots of people out there waiting for the next video to come out. And if you've bought me a coffee or sent me a YouTube super thanks recently, thank you so much for the time and the effort and the generosity involved in that. Really means a lot to me. Now, just before we go on any further today, I want to talk to you about today's sponsor, NordVPN, who I use on a daily basis and who are offering Joe Blogs viewers an exclusive deal. Unfortunately, cybercrime is becoming a daily occurrence. We're hearing about it more and more. And in fact, if you follow the channel, you'll know that this channel itself was hacked by cybercriminals. And if you want to avoid the same thing happening to you and your finances, you need to start using NordVPN. By using NordVPN, every time you log on, you'll be protected from all sorts of criminal activity. And don't override it like I did and expose yourself to a hacking incident. I spend a lot of my time researching articles to put together my videos. And unfortunately, I find that sometimes I'm geo-blocked from those articles. I'm not in the right country. However, when using NordVPN, you'll be able to access information, data, news articles, TV shows, movies, and sports matches that are not available in your region. And the great news is that Joe Blogs viewers are being offered an exclusive deal, which you can access by clicking in the link below. And the great news is that it offers a 30-day money-back guarantee. So if you're not happy, you can get your money back within the first 30 days. This chart shows the revenue that Russia is earning from the export of crude oil dating back to the start of 2022. The scale on the left-hand side of this chart is shown in millions of euros per day and goes from 0 at the bottom to 350 million euros at the top. And the different coloured sections we've got here represent the income being earned from exports to certain countries. The red section at the bottom is China. The brown section in the middle is India. The grey section, which is predominantly on the left-hand side of the chart, represents the sale to other countries, predominantly European Union countries. There is a very thin red line representing sales to Pakistan, a small green section representing sales to Saudi Arabia, a larger green section representing sales to Turkey, and the dark purple section on the far right-hand side represents unknown sales, so countries that have not been identified. And what I wanted to do here is start off by looking at the current situation, so the far right-hand side of this chart. The most recent data shows that Russia is currently earning 56 million euros per day for crude oil sales to China, 64 million for sales to India, 12 million for sales to Turkey, and 46 million euros to unknown countries. And the combined total of all of those sales is 178 million euros per day, which is the equivalent of $196 million. So on an annualized basis, if you multiply it by 365 days, that tells us that Russia is currently earning $71 billion per year from the sale of crude oil. If we now compare that to the situation 4 months ago in May 2024, Russia at that stage was selling 73 million euros worth of oil per day to China, which is 30% more than it is today, 143 million euros of crude oil to India, which is more than double the amount that Russia is currently selling to India, and 22 million euros to Turkey, which is 83% higher than it is today. And the combined total of all of the sales in May 24 was 238 million euros per day, or around $262 million, which on an annualized basis equates to $96 billion. So the current amount of revenue that Russia is earning is down by $25 billion on an annualized basis compared to where it was in May 2024, before all of the additional sanctions were applied by the West against companies making payments to Russia. And this is really starting to hurt the Russian economy, because if companies that are buying oil directly from Russia aren't actually able to make the payments, it's going to cause a huge liquidity crisis in Russia, and also means that those companies may not be able to continue providing sales. And I think that's what we're seeing here. We're seeing a reduction in the amount that's being sold to China and India as a result of those payment problems, which we've talked about in other videos. And this is now starting to hurt the Russian economy. And if we now compare the current level of sales against the peak period in June 2022, at that point Russia was earning 106 million euros per day from China, which is 90% higher than it is today. 71 million euros per day from India, which is 11% higher than the current levels. 25 million euros per day from Turkey, which is more than double the current rate. And the biggest single change since June 2022 is that back in those days, Russia was earning 103 million euros per day for sales to the European Union. And as you can see, those sales have virtually disappeared from the chart. And the combined total of all sales in June 2022 was 305 million euros per day, which is the equivalent of around $336 million. And on an annualized basis, that meant that Russia was earning $123 billion per year, which is $52 billion more than it's earning today. So that tells us that the Russian economy is struggling significantly, because it's seen a drop in income of more than $50 billion in respect of crude oil sales. This chart shows Russia's revenues from refined oil product sales dating back to January 2022. And as we've discussed before, refined products are basically anything that's been through the refinery process in Russia. So things like gasoline, diesel, kerosene. And obviously, if they've been through the refinery process and there's been some added value, they will be sold for a much higher price. And what this chart shows is that Russia is currently earning 14 million euros per day for the sale of refined oil products to China, which interestingly is around 25% of the revenue that it's earning for crude oil sales. So crude oil sales are 4 times larger. It's earning 12 million euros per day from India, which is around 20% of the crude oil sales that Russia is making to India. Now, interestingly, the biggest single source of revenue for refined oil products are other countries. And these other countries include countries in the European Union, because some European nations have struggled to be able to find alternative supplies of refined oil products at an affordable price. So the European Union has allowed dispensation, particularly for landlocked countries that don't have any ports and therefore are finding it difficult to be able to get anything other than through the pipelines that were put in place by Russia. And Russia is currently earning 81 million euros per day for the sale of refined products to all of these other countries. The second largest buyer of refined products currently is Turkey, who are purchasing 41 million euros per day. Saudi Arabia are purchasing 9 million euros worth per day. And the next biggest buyer are unknown countries that are purchasing 34 million. And in terms of answering the question as to who are these unknown countries, well, obviously we don't have any specific detail, but countries such as Venezuela and Cuba that Russia has a long-term relationship with may be included in those figures, and therefore there's a question as to whether or not Russia is actually being paid for those sales. The combined total of all of the revenue that Russia is currently earning is 191 million euros, which equates to $210 million, and on an annualized basis, that equates to $76 billion worth of revenue every single year, which interestingly is $5 billion higher than the figure that we just looked at for crude oil. So Russia is now earning more from refined product sales than it is from crude oil sales. If we now have a look at the situation in March 2024, you can see that at that point China was purchasing 22 million euros of refined products every day, which is 57% more than it's purchasing right now. India was purchasing 17 million euros per day, which is around 42% more than it's purchasing today. Total purchases from the other countries, including European countries, was 149 million euros per day, which is 84% higher than it is right now. Turkey was purchasing 48 million euros per day, which is 17% higher than now. However, the sales to unknown countries were only 6 million euros per day, and the combined total in March 24 was 250 million euros per day, which is the equivalent of $275 million. And that means that on an annualized basis, in March 24, Russia was earning $100 billion from the sale of its refined products, which is $24 billion higher than it's earning today. So that represents a significant loss of value from Russia's point of view over the course of the past 6 months. And if we now have a look at the peak period for Russia's earnings from refined product sales in the summer of 2022, at that point Russia was only selling 7 million euros per day to China, which is 50% of the total it's selling right now, 12 million euros per day to India, which is exactly the same as where it is today, a whopping 257 million euros per day to the other countries, including the European nations. And that massive increase was because a lot of countries took a while to be able to find alternative suppliers. So some of the bigger nations, such as Germany and Italy, were still buying directly from Russia at that point, and those sales are more than 3 times the amount that's being made today to the other nations. Turkey was purchasing 34 million euros per day, which is 17% less than it's purchasing right now, and the sale to unknown countries was only 2 million euros per day. And the combined total back in August 2022 was 319 million euros per day, which equates to $350 million. And on an annualized basis, Russia was earning $128 billion from the sale of refined products, which is $52 billion more than it's earning today. And if we aggregate the revenue that Russia is earning from its crude oil sales and refined oil products right now, it's $147 billion per year, which is down by 49 billion compared with earlier in 2024 before the increased sanctions were put into place, and is down by $104 billion compared with the summer of 2022. And this really puts into perspective just how serious the situation is in Russia, because they've lost more than $100 billion worth of annual revenue. This chart shows the price of Russian Urals crude oil dating back to January 2022. And the reason I wanted to show this is really to establish how successful the price caps have been in limiting the amount of income that Russia is earning from the sale of its crude oil. Now, the scale on the left-hand side of this chart shows the price per barrel in dollars and goes from 0 at the bottom to $120 at the top. And there are 3 dotted lines on this chart. The horizontal one has been set at $60, which is the price cap for crude oil sales. The first vertical dotted line is on the 24th of February 2022, which is when the invasion of Ukraine started. And the second vertical dotted line is in December 2022, which was when the $60 price cap was introduced against Russia by the West. So if we start off by looking at the situation in January 2022, before the invasion started, at that point, Russia was selling its oil for $75 per barrel. Now, as concerns started to rise about the risk of Russia actually launching an invasion against Ukraine because it was building up tanks and troops on the border, oil prices started to increase, and Russia benefited from that. And then immediately following the invasion, prices spiked all across the world, and Russia initially was selling its oil at almost $120 per barrel, which, as you can see, is the highest point at any time in the last 2.5 years. Now, the immediate reaction to the invasion was that most of the countries in the West came out and said that they were going to stop buying Russian oil, and Russia had to find new buyers, and therefore it started offering discounts to countries such as India and China. And by April 2022, the price of a barrel of Russian oil was down to $67 per barrel. Over the next couple of months, the oil market started to rise again, and despite the fact that Russia was selling at a discount, it still managed to achieve over $100 per barrel by June 2022, which coincides with the record level of revenue that we've just looked at. The global economy started to slow down in the second part of 2022, and we saw oil prices falling, and by the time that the price cap was introduced, Russia was actually selling its oil at $60 per barrel. In the first half of 2023, the price of Russian oil fell below the $60 price cap, and this was seen as being a success by the West. However, in the second half of 2023, there was a considerable increase in the price of Russian oil sales, and by September, Russia was selling its oil at $85 per barrel. This prompted a renewed round of sanctions by the West, and by the end of 2023, the price of Russian oil had fallen once again below the $60 price cap. However, if you look at what's happened during 2024, the price of Russian oil has risen and has remained above the $60 price cap throughout the whole of the year. And this chart, which shows the level of discount that Russia has offered to its buyers against the general market prices over the past 2.5 years, goes some way to explaining why Russia is currently selling its oil for more than $60 per barrel. The scale on the left-hand side of this chart shows the percentage discount that Russian oil has been trading at, and goes from 5% positive at the top to 30% negative at the bottom. And the 3 different lines that have been plotted on this chart show 3 different types of Russian oil. The Urals oil that we've been talking about previously is shown by the dark black line, ESPO is shown by the darker blue line, and Sokol is shown by the lighter blue line. And what this chart shows is that prior to the invasion of Ukraine, Urals was trading at a slight discount to the market rate, around 2%. However, as soon as the war started, that discount increased rapidly to 30%. So Russia was having to offer a 30% discount to India and China in order to encourage them to take large volumes. Now, by the middle of 2022, that discount had reduced to 20%, and it remained at that level until the end of the year. At the start of 2023, after the price cap had been introduced in December 22, the discount increased to almost 30% again. However, as you can see, over the course of the last 18 months, that discount has progressively reduced and is now sitting at around 5%. So that is a massive difference to the 30% discount that Russia was offering immediately following the start of the war. And one of the reasons why Russia has significantly reduced the discount that it's offering to its buyers is that it's no longer dependent on the West for the transport of its oil. These 2 charts show the percentage of Russian oil being transported by ships owned by the West, Norway, and other countries. The light blue section at the bottom are ships owned by the West, the dark blue section in the middle are ships owned or insured in Norway, and the grey section are other countries. So we start off by looking at the situation for crude oil. Back in January 2022, almost 80% of all Russian crude oil was being transported by ships owned or insured by the West or Norway. And why that's important is that those companies are applying the price cap against Russian oil. So if Russia continued to use them for 80% of its transport, 80% of all of its oil would be subject to that price cap. However, as you can see, over the course of the past 2.5 years, Russia has significantly reduced the amount of its crude oil that it's transporting using those ships, and it's now down to less than 20%. Now, the situation with regards to the refined oil products, which is shown in the second chart, is slightly different. Back in January 2022, almost 90% of all Russian refined products were being transported using ships from the West and Norway. However, today, that percentage is down to 60%. So that means that 40% of those shipments won't be subject to the price cap, but 60% will. And this chart shows the breakdown of how Russia has managed to achieve the movement of its oil without using ships owned by the West or Norway. The top section here shows the number of voyages transporting Russian oil undertaken in August 2024 by ships owned or insured by countries that were operating the price cap. And the section below shows the number of voyages undertaken by the shadow fleet or the dark fleet that nobody is monitoring. And what these charts show is that Russia is now using the shadow fleet for the majority of its transport. And that's how it's able to achieve such good prices for the sale of its oil, because using the shadow fleet means that the price caps don't apply. Now, one other way that Russia has been avoiding the price cap is by undertaking ship-to-ship transfers. So basically transferring oil from one ship to another. And the way that avoids the price cap is that the receiving ship doesn't know where the origin of that oil came from. So basically it doesn't know whether it's Russian oil, and therefore the price cap can't be applied. The scale on the left-hand side of this chart shows the number of ships involved in those ship-to-ship transfers. The light blue section at the top represents ships owned or insured in the European Union and the G7. The dark blue section across the middle are ships owned or insured in Norway, and the orange section at the bottom are other ships. And what this chart shows is that Russia has used a significant amount of shipping for ship-to-ship transfers. More than 30 or 40 vessels every single day are undertaking these transfers. And it's estimated that in August 2024 alone, over $1 billion worth of Russian oil was moved using ship-to-ship transfers. And 73% of those transfers were facilitated by tankers either owned or insured by the West. So Russia has found a way of bypassing the sanctions by doing these ship-to-ship transfers. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening with regards to the income that Russia is earning from its oil sales is really critical in terms of what's going on in the Russian economy. Now, Russia has large quantities of oil, nobody's disputing that. And since the invasion of Ukraine, it's pivoted its business and started selling huge quantities directly to China and India. And initially, the price of those sales was significantly below the global price for oil. There was a discount of around $20 per barrel. And Russia was happy to do that because it needed to keep all of the wells pumping. The last thing that you want to do if you're an oil-producing country is cut back on your supplies, because that can cause serious problems in the future if you try to then ramp things back up again. So Russia was happy just to keep the flow going. And initially, following the invasion of Ukraine, there was actually a spike in global prices. So Russia, despite the fact that it was earning less per barrel than the rest of the sellers, was still earning a healthy profit. Now, over the course of the last 2 years, the West has tried to increase the sanctions. And what we've seen are waves in terms of the income that Russia was earning. In the summer of 2022, Russia was earning record profits from its oil sales, and it looked like the war wasn't going to actually have any impact on the Russian economy. However, what we've seen during the course of 2024 is a complete change to that. Earlier this year, around May time, Russia was still earning good profits because it was managing to sell large quantities to China and India. However, what we've seen over the past few months are, firstly, the global price of oil has started to come down. So that's obviously impacting Russia as a seller of oil. It's impacting all countries that sell oil. But secondly, because of the secondary sanctions restricting the payments coming out of China and also India, Russian businesses are now struggling to be paid, and this is causing them major problems. And we have seen 5 consecutive months of falling oil revenues. And I think what's interesting about the latest data is that it tells us that Russia is now earning more from its refined oil sales than it is from its crude sales. And the reason why that's really interesting is that the majority of those refined oil sales are not going to India and China. India and China actually have their own refinery businesses. They buy in crude oil and put it through their own refinery, and they can then sell that at a profit. So even though the oil doesn't originate in India or China, they can export it to other countries and make some money from it. And that's a good business if you're sitting in those countries. So that's one of the reasons why India and China don't want to buy refined products. They can do it themselves. And the other reason is because it's more expensive. They would rather buy the raw material and put it through their own system. So Russia is selling its refined products to a variety of other countries, including some in the European Union that are still struggling to be able to find alternative supplies at the right price. But refined oil sales are definitely more vulnerable from Russia's point of view, because if the European Union can find alternative suppliers, then they will do that. And also, as the price of oil starts to come down, there is more pressure on those refined oil prices. They will come down as well, and therefore the margins will start to reduce. But the other issue that Russia is facing, and this is possibly the biggest issue, is that over the course of the past 6 months, Ukraine has started targeting oil refineries in Russia. It's sending hundreds of drones per day loaded with explosives, trying to hit those sites to take them out of action. And I've reported on this in multiple videos. We've seen big facilities closing down because of one strike, because in an oil refinery, it's a chain reaction. And if you take out one part of it, even if it's a relatively small site, it can close down the whole facility. And we've seen that in many occasions. And if Russia continues to be hit with strikes from Ukraine, there is a real threat that its refineries will have to keep closing. That will reduce the amount of refined oil that it can actually export and will seriously hurt Russia's revenues. But what we've seen from the data in today's video is that the current amount of revenue that Russia is earning, both for crude oil sales and refined oil sales, is down by around $50 billion compared to where it was earlier in 2024, before the increase in the sanctions applied by the West. And it's down by more than $100 billion compared with the summer of 2022. So the Russian economy has seen a huge reduction in the amount of money that it's earning from oil sales. And this is going to hurt the economy long term, because Russia is currently increasing the amount that it's spending on the war in Ukraine. That money has to be funded from somewhere. The fact that Russia has seen a fall of more than $100 billion in revenue over the past 2 years means that it's more likely that they're going to have to dip into their reserves, use the National Wealth Fund. And if Russia continues doing that, if it's spending more than it's earning, at some point that National Wealth Fund will run out and Russia will become illiquid. And that's a major problem, obviously, from the Russian state's perspective. So the overall summary of today's video is that over the course of the past 2.5 years, Russia has managed to increase the amount that it's selling its oil for. It started to be able to find ways to avoid the price caps that were applied against it. However, the general fall in prices in oil across the globe, and also the reduction in purchases by India and China, are now starting to hurt Russia. The amount of revenue that they're earning from their oil sales is down by $50 billion in 2024 and over $100 billion compared to where it was 2 years ago. And if this situation continues over the course of the next 3 to 6 months, the Russian economy is going to struggle significantly. It's going to be under pressure in terms of funding its invasion of Ukraine, and there is a real chance that Russia could run out of reserves. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.